One analyst at Parthian Securities said the equities market has been in decline since February this year when the CBN started hiking the monetary policy rate, and transaction volumes at the market have also been low. However, they expect continued interest in choice securities. Chinazom Izuora, Senior Associate Investment Brokerage at Parthian Securities, joins me now for more on this. Chinazom, thank you so much. Pleasure to have you on the show today.
Thank you for having me.
Well, it's Wednesday, so let's start with a midweek review. I suppose we can't talk about that without talking about the outcome of the MPC meeting yesterday. So let's start from there. First of all, was the market expecting a hike of 150 basis points? There were several. The general consensus was definitely there would be a hike, but was the market expecting that 150?
Yes. So the consensus was there was going to be a hike. The actual amount was what was in contention. A lot of people were saying it was going to be below 100 basis points. So I think the 150 was probably a bit more than was anticipated. But the consensus was that there was going to be a rate hike.
Right.
But we saw two sides of the divide. There were a lot of people that felt that the central bank should hold because of the pressure on businesses and households that higher interest rates cause. But of course, the monetary authority has its own position on these things.
All right. Obviously, the CBN governor has made it clear that he's focusing on fighting inflation and also does recognize the fact that that would also stifle growth in the economy. But, how has that or is that impacting sentiments at the market? We saw trading a little depressed today. Is that something we're going to see as the market continues to digest the impact?
Most likely, risk-averse investors are going to move to the fixed income space because it's a guaranteed return and
risk very much lower risk compared to the stock market.
And with the current environment, you can also think of what the performance of some of the companies are going to be like. And of course, market sentiment is about expected performance. And if based on Q1 numbers or what you're seeing so far, you already know that the cost of capital, the operating expenses are already putting pressure on consumer goods companies and some of the manufacturers. So a lot of companies are already anticipating poor performance from those sectors.
So does that mean for the consumer guys now, the retailers, are we going to see, do you think that they will be expecting a drop, perhaps a drop in volumes? And I knew that there's an extent to which they can push the higher prices on consumers. And some economists have told us that we might get to a point where we may see price resistance on the part of the consumers. If something is just too expensive, some people just simply cannot afford to buy it, so it won't be purchased. So is that something we are heading towards too?
So that's something we need to watch for. And when we see Q2 numbers, we can then check for that, because I think for the consumer goods companies, the Q1 number we've seen already, Unilever reported a growth in revenue in Q1. And it's probably not going to be the same for every consumer goods company.
Right.
And some products have more elastic demand than others. So it's going to hit all of them differently.
Right.
And also based on just how diversified their products are across segments.
Right. Now, so who is an investor who will stay in this market where it's a risky market? Prices are, obviously, investors are heading over to the fixed income market for obvious reasons. So where does that leave this market, and who is that investor that will remain in this market? So
most likely we're going to see long-term institutional investors stay in the equity space. Already we've seen a lot of large volume transactions. We continue to see large volumes in the banking sector. And from some of the disclosures we've seen already, we know that a few weeks ago, Access and UBA were reporting directors buying up or buying their shares.
Okay.
So when insiders buy, they disclose. So because of that, we see participation from insiders buying those securities. So we can anticipate that long-term investors are going to take advantage of lower prices to accumulate.
Right. So obviously, so that will be some sort of like a safe haven for some investors. So at a time like this, when there's market volatility, perhaps outside of the banking sector, what other sectors or stocks could serve as safe haven in code for investors to go into and, just cool while the market volatility sort of, tapers down?
I mean, so for that, it then goes into more portfolio analysis and portfolio diversification. So investors might want to look at cyclical stocks. So we know that there are some securities that perform better when the entire market is down. So looking at performance today, even though a lot of year-to-date, a lot of companies are down, we still have companies that year-to-date are positive. For example, companies in the in the construction sector.
Right.
We've seen Julius Berger, some of these.
Maybe they're benefiting from, obviously, the capital expenditure from the 2024 budget. So they would always, I mean, contracts, to build infrastructure, roads, etc.
And then the news in the market.
Right.
So some companies are also going to benefit from, perhaps they operate in sectors that are suddenly benefiting under the initiatives of the current government. You will see investors like taking positions in those securities. Because even though market is down, we are still seeing intraday volatility. We are still seeing periodic volatility.
So you're saying you're seeing high volumes
in some securities on some days.
On some days.
So
still some savvy investors here and there in the market.
A bear market is very risky time to be a trader. But for portfolio investors, long-term investors, it's a good time to look at what's undervalued and take positions. But for traders, you really need to be on your system. You need to be monitoring to take advantage of those volatilities, those movements.
Right. So for you, I mean, what stocks, at Parthian Securities, what stocks are on your radar? Well, what are you telling your clients in terms of, the stocks that you like right now?
So for us, we always tilt towards fundamentally sound stock. And when we are dealing with a lot of, when we are dealing with older investors, we recommend fundamentally dividend-paying stocks that we know that it's up, it's down, you can buy it and hold it long term. So that's what we would recommend, especially retail people that are not in the market on a day-to-day basis, are not following what's happening in the market. It's better to buy the fundamentally sound stocks that you know are going to remain a going concern regardless of what happens this year.
Right. So what your forecast for the trading for the rest of the week? We have 2 more trading days for the week.
Yes. So we anticipate we're going to keep seeing the same low volumes. ASI remains negative. Intraday, we see the ASI go green, and then by end of day, it's back down. So we know that there's movement. We know there's still value there.
Right.
There's still value across a lot of securities. So it's almost like we're just seeing a lot of cautious positioning.
Cautious trading. I mean, can you blame investors? We'll leave it there. Chinazom, thank you for talking to us today. Chinazom Izuora, Senior Associate Investment Brokerage at Parthian Securities.